Good day, traders. A short video today on signals versus setup. So, posted this picture earlier, Japanese yen 15-minute chart closing as a first red day. And I've had several traders email me confused that there's some confusion. People think that any down day is a red day, a first red day, and it's not. Typically, a true first red day will have a peak formation in a rising strong market, 2, 3, maybe 4 days of consecutive bullish candles in terms of their daily closes, which we can see on our Japanese yen. We've had that. Now we're in a strong upward moving market, but we're on day 2, and this was an inside day, narrow range day. A true first red day will have a peak formation that then fails and closes lower than it opened. Now, traders have been sending me pictures of charts that are on downward trends, calling a first red day down low. And you can get resets, but typically the first red day is something you look for in an upward market. The idea is that they've got traders trapped up high. And so, yes, you can have markets that have false breaks and bull traps, bear traps, all of those sort of things, but a true first red day has a peak formation that then fails. It goes vertical first and then fails, and we have trap volume up high. This is day 2. It's an inside day, but this is only a signal. It is not a setup. So traders don't just get in and sell this because you think it's going to go down. The market still needs to set up, and the next thing that needs to be understood is that I'm coming to the screen in my session, in whatever session you're trading, whether that's Asia, London, New York, to see if there is a setup in that session. I'm not sitting at the screen all day looking for the sell. I'm coming at the same window looking for that opportunity right at the timing window. If that market is set up in the timing window, it will move. If you're sitting there nursing it or looking for opportunities outside of the timing window, this may not even end up to eventuate into any particular trade setup. The first red day is merely just a signal. Now, if we scroll back, we can find a few other examples of first red days. And again, this comes back to understanding where we're at in the weekly template. High of the week, peak formation, and then a situation where they've combined this into the half Batman 2-day pattern into a Friday first red day. So first red day closes as a Thursday, peak formation on the Wednesday at the high of the week. But this is an example of an Asian session opportunity. Now there was follow through later, but they're trading down into a low at the low of the week on the Friday. So the move was in Asia in this particular case. So other traders who were looking for that opportunity were trying to trade into the low of the day. So first red day that did eventuate in the Asian session at the end of the week after the peak formation, and then a variation of a first red day close. So again, just empowering that this is just merely a signal day. We still need to have a setup. Another example, first red day, I'll bring this down lower. Again, Wednesday high of the week, trap volume up high, a variation of this, and then rolling over and breaking down in the Asian window. Great trade setup right in the Asian session. Follow through in the Europe-London window, but the collapse in the US session. So again, a 3-session build-up. So understanding that if you do have a setup that eventuates, where you may be at in relation to that bigger picture for the full day. Obviously, in this particular case, the U.S. session blew off, but the Asian session was the original breakout of the previous day's low, another inside day, but a different variation again of the first red day. Peak formation on the day itself that closed below the open, but we also had the peak formation rise to the high of the week on the Tuesday, Wednesday. And another example where the Fed was used on the yen as well. First red day, the Fed went vertical, and we'll just bring this chart together. traders can see that when the Fed closed, we had lots of volume trapped up high. 3, 4 days, 5 days of volume trapped up high. But again, merely a signal day. So when we come back, the market still has to set up for a trade opportunity. And again, in this particular case, we saw Asia make a high of the day. And then we saw the Europe-London Open give a fantastic, scalable capitulation trade setup right into the open of this session, and then follow through in the U.S. session. These were much greater than 5-to-1 opportunities. So just emphasizing that first red day is merely a signal, and not to confuse any down day as a first red day. You're looking for specific criteria that can present and then potentially eventuate into a trade setup. So hopefully that makes sense. Again, not a trade recommendation at all. Still need to have that opportunity set up in the session that you're going to be trading, managing your risk, and then understanding where to be taking profits. Keep it simple. We'll see what unfolds today. Have a great session, and may the markets go with you.